The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the May 7th Thoughtful Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to an extraordinary start of your day. If not, let's make sure that we do everything we can to have an extraordinary day. I know I'm going to. I get to do a workshop tonight from 6:30 to 7:15 on the psychology of trading. So I'm all jazzed up for that. Hope to see you there. And let's make sure that no matter what, we do everything we can to get every ounce of energy out of today. Let's always remember what's talked about is a dream. What's envisioned, well, that's darn right exciting. Of course, what's planned becomes possible, but what's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I'm honored by your presence. I'm here to serve you. Feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can call it 727-445-1044. Remember, if you've got a question, pretty much the world's got that same question, so call in on behalf of the world. How about that for a random act of kindness out there? That's the way to kickstart your day on this thankful Thursday. Of course, this is the Hotel California Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow futures trading flat at 17,840. S&P future, S&P. Did I say Dow futures? The Dow is trading flat at 17,840. The S&P is flat, trading at 2,079. The Nasdaq Composite's up 6 points. Russell 2000 back a point and a half. No big deal there. The DAX is up 31. FTSE is off 57 points. Gold's back $4. Silver's off 16 pennies. Light sweet crude is off $1.11. Bluebird Bio, Amazon, Equinix, Avago, Quality Technologies, Google, Alibaba, HubSpot, all to the upside this morning, to the downside. Priceline, Copacabana, Copa Holdings, Treehouse Foods, Green Mountain Coffee Roasters, New Skin Enterprises, Huntington, Whole Foods Markets, to the Shake Shack, to the downside, shaking some things up. Okay, let's go start off with the markets. It couldn't be easier to call the markets this morning, both from, and when I say that, what I'm referring to is really being able to call both sides of the market. Here's where we can take a look at the market being up against a strong level of support. If it holds, we can identify where price moves to, and if it fails, we can also identify where price moves to. We'll go back to that. Let's first start taking a look at what's going on inside of the QQQ and the other its other brethren, the ETFs for the indices. Let's go take a look at the Qs. What do we know about the Qs here as of yesterday? Well, one, we have a swing point that it's trying to get to, and that's all the way down to that March 26th area. That swing point has got 47 million shares out there. What the Qs managed to do yesterday was not hit it, but move lower with light volume. 42 million shares is all it had. So if it's trying to bust out those lows, it needs to get a little giddy up and go in it. What it did do, what the Qs did do, is they got to the bottom of support of its TAS market profile, 106.11. They've held that. If we're going to see a bounce inside of the market, which is what the 120-minute, the 2-hour charts show us, across the board, by the way, in the Dow, in the NQ, in the ES, and even inside the Russell 2000, we can see that they are suggesting a bounce. So what does that mean for the QQQ series ETF? Well, it means one of a few options out here. One, if you take a look at just a dead cat bounce, it's 107.97.2. 109.19 is your 0.618 retracement. That's what I would suspect that we would see if we are really in the beginning of the unfavorable seasonal cycle. So that's what you should be looking at inside of the QQQ series. If we go take a look at the IWM, the Russell 2000, originally, after the close, I thought the Russell 2000 was the one that gave us the most sound message yesterday, but that proved to be a little bit different after about, I don't know, whenever they finally settled all the volume inside the IWM. But the IWM swing point, March 10th, not March 26th, that has 32 million shares. The top of that is 120.70. The bottom is 119.83. Volume yesterday was rejection, a third day, a fourth day now is what we've got, but yesterday was a third day of a rejection of of the top of that swing, 120.70, 34 million shares. Earlier in the day, or at the close at 4 p.m., looked like much lighter volume. It turns out it was just slightly more than the 32 million share day from March the 10th. What does that say? That says when you come into a swing point with volume, it says you go down and test it. Well, so you got another test of the IWM of that area. If it holds today above 120.70, can do it with less than 32 million shares. Its message would be one of being able to bounce and maybe even continue in its gosh darn consolidation pattern, which could say you could run all the way up into the 125 area out there for the IWM. It probably runs into some significant resistance, though, right here at the April 30th high, right around 123.44. That's what's going on inside the small caps. So we go take a look at the S&P 500. We go take a look at the SPY. Up 8 pennies, 22 million shares. What did it do yesterday? Well, headed for that same March 26 swing point. That's got 153 million shares. What kind of volume did we have yesterday? Light volume. It was dyslexic volume because it was 135 million shares out there. And let me tell you something. Having dyslexia is a good thing. Let me tell you why. It means that you can see things differently than others. In fact, if you go do studies about some of the great CEOs out there, you'll find out that they actually have that. You see, it's always about being able to see things different. If you see things the same as everybody else, what good is that out there? It's always about seeing things differently out there. And it's important to be able to see things the way they are, especially for yourself. And that's going to be one of the areas of focus in this evening's workshop, the psychology of trading out there. Because, I can teach you how to buy and sell the D point. I've done plenty of workshops on it. But the thing that I hear from people that I talk to clients, non-clients all the time, and the thing that I hear most is, I know the pattern, I've learned the pattern, I watch it get down there, and I freeze and I do nothing. Why do I freeze? And after hearing that enough, what you want to do is you want to be able to reach out, and you want to reach out and help someone. And the easiest way to do that is to understand that universally, each of us need to be able to overcome those obstacles. Look, maybe taking the trade is not your obstacle. Maybe it's placing stops. Maybe it's exiting the trade. Maybe it has nothing to do with trading whatsoever. Maybe it has something to do with some type of obstacle you're trying to overcome inside your life. Maybe it has something to do with health. Maybe it has something to do with your relationships out there. What I can tell you is that the tools that I'm going to share tonight will help you overcome any hurdle in any area of your life out there. How powerful would that be? So you can join me. You've got 3 easy ways to do that this evening. You can do that by just simply signing up for the workshop. That's $97 out there. No big deal. You're going to spend that in, a handful of espressos, or you can certainly spend that at one little shopping experience at the whole paycheck market out there. Another way, just simply sign up for the newsletter service. If you've never signed up, you can do that. 30-day unconditional money-back guarantee. I mean, you got nothing to lose out there other than not doing it. And if you're a newsletter subscriber already, obviously you're already in, and it's just going to be a way for me to be able to provide service to each of you out there. So back to the SPYs out here, moving down with light volume, 135 million versus 153, and running into support of its TAS market profile low, 207.62. Where could the bounce take us here? Well, quite frankly, the bounce could take us up to the 211.22 area. I think that where the bounce takes us to is by paying attention to what's going on inside the ES Mini versus the actual SPY ETF out there. If we go take a look at the Dow Diamonds, what are the Dow Diamonds doing? The Dow Diamonds are the one that actually were moving into the swing point with volume. That swing from March 26, 6.6 million shares, and yesterday this was 7.5 million shares. That says that ought to be tested. Has not been tested yet. Maybe it gets tested this morning. Maybe it doesn't get tested because of a potential bounce in the market, and eventually gets tested again because you were moving into a swing point with volume. Right now, you've got the diamonds trading out of 178.39, closing back above 178.61, which suggests a move to 179.86. That is what's going on in the 3 ETFs. I have an email question here. It says, "Hi, Steve. Where is the support on the U.S. dollar?" The easiest way to answer that question is to go trade the euro US dollar, or is to pay attention to the euro US dollar. We'll pull that chart up on our screen, and the reason is because of the weighting structure of the euro inside of the US dollar index. So to me, the easier decision, or the better question, is not where is support inside the US dollar index, but what is the euro doing? Because if the euro continues to move higher, If it continues to get stronger, the U.S. dollar index would start to get weaker out here. And what the euro has done is it has run into a significant level of resistance. It is the descending price channel that has acted as resistance for quite some time, certainly going back into June of last year. So for nearly a year, this thing has been traveling with inside this descending price channel. So at this stage here, the information that is available to you and I is that if this area here acts as resistance, the U.S. dollar index is going to continue to move lower. It has a choice, but the euro is 57% or something of the weighting. That says that the Great British Pound, the Japanese yen, the Swedish krona, the Canadian dollar, and the Swiss franc will have to do all of the heavy lifting in order for the U.S. dollar index to have found a bottom and move higher. On the other hand, if in fact we can see the euro break through and crack through, and there's nothing in place as we take a look at the euro trade right now that says that it can't do that other than that long-term descending price channel. But if it can break above this channel, then that says price moves up into the 117 area. So if it in fact gets stronger out there, then what that says, and it moves higher, then we see the U.S. dollar index go ahead, and if it gets sorry, I was just trying to got thrown off track there. If it moves up into the 117 level out there, then we see the U.S. dollar index. So as the currency, man, I really got messed up. The currency pair is moving higher. We'll see that put some pressure inside of the U.S. dollar. This is Steve Rhodes with TFNN. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the Dow is up a nickel. The S&P is flat. The composite is up. What is it? Up 7 points out there. Sorry, I am multitasking and doing a very poor job of it. To the upside, you got Bluebird, BioQuality, Amazon, Avgo. To the downside, Priceline, Copa Holdings, Treehouse, Green Mountain Coffee Roasters, Shake Shack out here, and also I see a Verona Systems. That's not to be confused with My Sharona. What was the name of that group? What was the name of that group that did? I think it was a one-hit wonder out there. My Sharona. What was that? Something like the Shack, the Cack, the Knack, the something like that. It was something like that out there. The Knack. Thank you, Al. I knew it was something to rhyme with Shake Shack out there. In any event, so what do we want to take a look at? I suppose you would like to know, what are the markets going to do? Steve, could you look inside your crystal ball? Tell me what the markets are doing, what I need to look at. All right, thank you for asking that question. So let's go take a look at Stevie's crystal ball. Let's take a look at the Dow first. Let's look at the Dow futures. As if you didn't catch the first hour, Stevie says that the key charts to be watching are the 120-minute charts for all time frames. That's where we're going to get the clue as to what the market really wants to do out here. Now, when I take a look at the Dow futures out here, made a beautiful 1-to-1 A to B equals CD to the downside, made a beautiful seventh inning stretch candle pattern to the downside, gave us a nice bullish reversal signal earlier this morning. I mean, it's a beautiful buying pattern out here from a trade standpoint. And maybe more. We're just about, and I'd say if we can see a close, it's trading at 17,793. Close above 17,872. 17,817 will go a long way to confirming that message and higher price. You say higher price, that takes us to where? It's easier for me to use the drawing tool on this chart. So let's go over here to the 4 time frames. Let's go, let's go here to this chart here. Let's use the right chart. Let's take a look at it. And what I would say is, we come up with 2 different areas. How about I give you the conservative one? I give you the conservative one. That's just simply taking a look at the C to D leg out here. So the C to D leg says we're right at the dead cat bounce right now, 0.382. That's at 17,792 when Christopher Columbus sailed the ocean blue. That was not the year. But when we take a look at a move and a break above this level, that brings into play 17,893. That would be the next move to the upside inside of the Dow. Now let's go. That's on the 120-minute time frame chart. Let's go over and take a look at the summation index for the Dow. Long way away from getting into positive territory. The price oscillator is what we're referring to. But if we were to see a break above that, then that says this is more than just simply a bounce in the market. Otherwise, as long as the price oscillator stays below 0, then the retracement that we're taking a look at inside of the markets is nothing more than that. It's just simply a retracement. It doesn't mean that things take off real big to the downside. It just means that it's retracement out here. Right now, sellers are absolutely in control inside of the Dow. On the longer term, this is a daily chart that we're looking at. Daily is a whole lot different than a 2-hour chart. And so it's really important to make sure that when you're entering a trade, what's the time frame, what's your strategy on that, and then stay with that strategy unless something changes significantly. So we've got at least a bounce in place, could turn into more of that, and would turn into more of that if we see this price oscillator get above the zero line. We were taking a look at the NQ earlier. If we go take a look at the NQ, and then I'll tie that into the composite out here on its 120-minute time frame chart, it's got everything you need to suggest that a fairly decent bottom is in place out here. Whether that's the case or not, we'll know if we can see it close now above 43.98 is the number for us to be watching. It's trading at 43.81 as we speak right now. If it can get above that, where does price take us to? Well, price can take us to a level. Let me switch back over here. Let's go to the NQ. That says that price, and I'll give you the conservative number. That means I got to get rid of this. We're going to take a look at the conservative number of that C to D leg on the way down. That says that price can bounce up to the 44.38 area. So far, it's made a dead cat bounce. It's gotten to the 0.382 retracement of that last leg down. If it can clear the price point of 43.97, says 44.38 would be in store for it. Now, when we take a look at the composite out here, we're going to go back and take a look at its summation indice out here, and we're going to blow that up on the screen. This is something that sellers have to be aware of and have to be watching, and that is that as we speak right now, we have a rising, I'm going to make this a green line, I just have to find it. We have a rising price oscillator. So it's making higher lows. That's that little green line that I just put in my chart versus making lower lows right here. That's always something that has to make the sphincter muscle of somebody that's short tighten up a bit, but not too tight, because it's not a problem unless that price oscillator gets above zero. We'll be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Before we went to break, we were taking a look at the, I believe we were looking at the New York Stock Exchange price oscillator McClellan Summation Index out here, and we're switching over to the NASDAQ Composite. Now, I think you guys know me, as hopefully you do, as a pretty straightforward guy. With regard to emotions, emotions are really critical to each of us with regard to trading. It's really critical to being able to read the emotions of the markets. Now, we use technical tools in order to be able to do that. And just something that I have such a passion for. And it's, you know, the way you do anything is the way you do everything. So you can imagine if I have a passion for technical tools as I do when it comes to trading and investing, you know, I've got a passion for patterns when it comes to life as well. Now, I'm going to show you a pattern that certainly I discovered by spending a lot of time immersing myself in it to look for clues as to what the market is doing. That way I didn't have to pay attention to what was on the news or what anybody else was saying. It was just about me going and reading the chart. So I'll teach you something here. We're looking at the NASDAQ Composite, and I'm taking on a visit back to 2009, back to March of 2009, and we're taking a look at the NASDAQ Composite. So I want to show you, let me move this one line out of the way for the moment. Let's move this. There we go. Just move this over here. And what I want you to pay attention to is as the market was making a low, you can see that it was making lower lows price-wise out here. I'm just going to draw this line. We're not going to worry about having to be exact or anything. Oops. So it's making lower lows at the same time that we had a rising price oscillator out here, okay? So that you see that in place. That's a divergence that if you are long or short, you have to be aware of that. The second thing that I noticed, which was pretty cool, much along the lines of, you know, we take a look at descending price channels like you and I did inside the euro. We can take a look at it, you know, in virtually anything out there because it's very cool how price travels with inside that. Inside of the price oscillator, it also sets up these descending trend lines out here. So in the case of the NASDAQ Composite back in March of 2009, and you'll see this pattern on and on and on and on and on repeat itself. It also happened to broke through that trend line. Now, broke through the trend line before the ultimate low was being made inside of the NASDAQ Composite. But even when that low was being made a few days later, see that trend line was broken here on the trading session of March the 4th. It was March the 6th that I went 100% all in. the market. 100% bullish in the market. It was a crazy weekend. I remember sweating a bit. I remember talking to a few other people, friends and family, and I said, here's what I'm doing. If you're going to do the same, you got to make sure you have stops in place, because if the lows get taken out, it's just going to be nasty out there. And but it didn't. But there was a clue. There were a number of clues that were presented to both you and I, simple clues out here, for us to not get too caught up into the moment that the sky was falling. Heck, we thought the sky was falling, or many people thought the sky was falling during the October Ebola scare out there, right? And we watched the same pattern set up inside the market. So when you see those patterns, they're great clues. Now, here's just another example of one back in October of 2009, when another bottom was made inside of the market out here. You can see back here in February of 2010, we saw price moving lower. We saw the price oscillator just simply move horizontally. So let me fast forward to today. You see this pattern all over the place when you take a look at my chart. So, I've done the work on it. I know how well it works and how much we want to pay attention to. Now, if we take a look at let's fast forward to where we're at today, okay? Well, we know that we've got right now, we know that inside the 2-hour chart, it's just a 2-hour chart, it's giving us a buy signal. We don't know what it's going to turn into. Is it just turned into the bounce and it's well off of the futures lows this morning? Maybe. But here, if we see the price oscillator, which is an end-of-day tool. I'm just happen to show it to you right now at 10:38 a.m. But it's rising with regard to yesterday versus a couple of days ago, so that much we know. We at least have a rising bottoms pattern out here. If that continues, and then we actually see that price oscillator get above that little descending red line out, that little trend line out here, now it's going to have to make you say, That doesn't mean that the price oscillator can't get up to the zero line and get deflected and move on down. But boy, the way that pattern works here, just go back and take a look at the recent ones. Just come back here to January 21st, 2015, when it broke. What happened? Prices eventually continued to motor on higher. What happened back here in December 17th, 2014? That led to higher price. What happened during the Ebola scare back in October of 2015? It was actually October the 15th. Where we saw that trend line break, and the bottom was really put in. Well, really, I guess it was put in on the 15th. The market started moving higher the very next day out there. So it's something that you just simply absolutely have to pay attention to. If it starts breaking to the downside, you don't have to really worry about anything till it gets to about the minus 70-ish to minus 65-ish reading. You're only at minus 44 as we speak right now, but it is something to absolutely pay attention to. So hopefully that's a tool that will help you in your trading and investing. The New York Stock Exchange, that Dow, I guess we only looked at the Dow. The New York Stock Exchange, she's already down to the extreme oversold condition out here. I was looking for minus 200. I was off. It got down to minus 186 it was. Yeah, minus 186, I think, was the number out there. But the New York Stock Exchange is actually signaling that it needs at least a relief, at least a bit of a relief rally. And it's kind of hard to, with the New York Stock Exchange, hasn't really done much, so it's kind of hard to really call it a relief rally. I mean, come on, give me a break. This thing is not making A to B equals CD down patterns to the downside. I mean, it's just kind of consolidating up at the highs out here. It hasn't really done much. Doesn't mean that it can't. It just means that as of 10:40 a.m. on May the 7th, it hasn't done anything other than get to an oversold condition pretty darn fast out here. So it needs a relief, at least of that. Whether that's today, whether that's tomorrow, it needs a relief of that area. Now, when you put all those other things together, the last piece of the puzzle becomes that VIX index. And what you and I know is that it's not the number that the VIX index is trading at. It doesn't matter whether it's 40 or whether it's 20 or whether it's 60 or whether it's 15 or whether it's 18. What matters is, where is it in relation to the 50-day exponential moving average? That's all that you need to know. You can know a whole lot more about it, but if you at least use that as a baseline, you're going to be in great shape for your trading investing, for your longer term, your intermediate term, to get an idea as to what's going on inside of the markets. Well, right now, it is sellers with regard to the VIX index that are in control. It's priced at 1558. 50-day exponential moving average is 1428. This is where price damage can come to. If we see these buy patterns inside the 120-minute charts do their thing as they should, which is continue to motor on higher, and we see the NASDAQ composite break through that descending trend line in its price oscillator, and we see the VIX index start getting down to that 1428 level, look out, folks, because you're going to see more than just a bounce out here. You may even see the markets go back and revisit their highs. At least the New York Stock Exchange probably go back and revisit its highs because it's not that far away from it. So that's what we need to look at from the out to the upside. To the downside, what we just want to do is really, in my opinion, pay attention to those 120-minute charts, because if those lows get taken out, as an example, we'll go back here. If the lows get taken out, we'll use the NASDAQ here, since that's really been one of the helpers to the downside. So the price point that you're looking at, come on, click with me. There we go. That's a price level of 43.32. 43.32, any close below that, and what we are most assuredly going to see inside the NQ is a move down to, what is it, 42.70? It's 42.70. That would be the move that you would expect there. So we've got both sides of this painted. If you're going to ask me what is it that is more likely to happen, what's more likely to happen is the move higher. Are those 120-minute patterns working out and a continued move higher? Just because it's more likely, that doesn't mean that it's going to happen. We just have our line of demarcation drawn here, and that makes it easier, in my opinion. That makes it easy. That's how you got to look at whenever you're trading. You want to have clarity on both sides of the trade. For me, I got clarity on both sides of the trade for sure out here. You take one, you put in a stop, and you just simply move forward and you look for the next trade out there. Now, I don't look at bonds too often with you, as you know, but there's another pattern out here inside bonds that is worth showing. We've seen a bounce here so far this morning. It's given back some of its gains if we take a look at the 30-year. Now, what I'm going to do, I'm going to switch over to the continuous contract, then we can switch over and take a look at the current contract. But if we take a look at the just look at the continuous with you and just show you. Now, in this case here, this has got the stochastic at the bottom of my screen. Give me a moment here to do something. So we're looking at the 14.3 stochastic to the downside, which has been a really cool tool to also identify topping patterns as well as bottoming patterns and or oversold patterns. And in the move lower that we have seen in the bonds, don't worry about this gap out here with regard to the continuous contract. As we take a look at the move lower, you can see if you come all the way back here into June of last year, that 30-year Treasury's gotten to is at or below levels of where we have at least seen bounces inside of the 30-year Treasury. So I caught a little bit of Tom's market minute. He was talking about seeing a bounce inside of the Treasuries, and I would say that this indicator here says exactly that. Now, that was the continuous contract. Here is the current contract in it. I just don't have enough sets of data points out here in order to be able to show you that same pattern. But with regard to the most recent high, I did show this to you, or I showed it inside of the Tiger's Den back right around April the 3rd. And what we looked at was price moving higher, and we looked at a descending tops stochastic out here, which was a really good indication of the instrument that wanted to go ahead and move lower. In fact, I remember looking at it because we looked at that pattern and we looked at the 50 line out here. And for whatever reason, especially when you see that pattern out here, is when you see the stochastic get below that 50 level out there. Again, I can't tell you why it works. It's a really great, it's like a early warning system, like a tsunami warning or something like that. And it worked again this time. So it's really, if you trade the treasuries out there, go ahead and make sure that you put this tool on that chart, because you'll find over time that it works really, really, really well out there. If we take a look at gold versus the GDX, the Gold Vectors Miners ETF out here, we're going to see two descending price channels. The one on the left is for the gold futures contract. The one on the right happens to be for the GDX. We've seen the GDX pull back here this morning. Of course, these things move directionally. They correlate with each other the majority of the time out here. What we're seeing the GDX do is actually pull back to what could be a level of support. So, I have been suggesting to you that it's difficult, that there's somebody, something, somewhere has their thumb on the price of gold. And at least because of all the closes within like a 20-point range out there, 1%, it's not that big of a deal. And if we take a look at The gold miners, though, and the price of gold, you can see it's really trading right about at the descending price channel. The price of gold, if it can stay above this, it's just really testing an area where it broke out of. So, it's kind of at a moment of importance out here. Ideally, you'd like to see it hold this level and then close above. Looks like 1947. It's TAS market profile support level out there. If it gets back inside the descending price channel out here, well, then you're looking at maybe a run down even into the swing point for March 31st out there. If you want to know what that price is, you'll just have to put another nickel in the machine. No, I'm just kidding. Let me just put my tool up so I can tell you what that is. That would say a price point of 1816 to 1864 if we see price break back inside that descending price channel out there. So let's see, we took care of gold, we took care of 30-year treasuries, we took care of the VIX, the summation index. I think my work's over. Yeah, we'll see if Basil wants to come on early out here. Nah, I'm just kidding out here. I don't want to leave early. I can't get enough of this. I can't get enough time. Hey, let's go take a look at some individual stocks that are moving inside the marketplace out here. Priceline trading off of its session lows. It was down about $75 or so. So Priceline showing some strength out here. Now Priceline really inside a consolidation between 1129 and 1264 out here is really its price range. Nothing more to really report there. Let's take a look at something that we haven't looked at. Let's go look at my Sharona. Let's go see what the heck is going on with Verona. I'm assuming that it's Verona, Varonis, just guiding lower and selling off quite a bit lower with some big volume behind it. I don't know what my Verona does out here, but what it is doing, if you are a holder of the stock, is nothing you are happy about, because this thing this morning here got back to its all-time lows, it looks like, back on October 22nd. Down around the $17 area. Now, the good news is it bounced off of that area, and you're trading back up at $20.66. But nothing looks good in the ticker symbol VRNS. Let's see. What can we look at that's to the upside that's not a buyout? Cormark Holdings, C-O-R-E. What's the deal there? They announced their first quarter earnings, and this thing here is a nice move to the upside. This completed an A to B equals CD pattern. If we take a look at it, the A point on this was all the way back out here on February 26th. Your B point, March the 11th, and your C point up here on April 2nd. Does a 1-to-1 A to B equals CD. You want to talk about a buying of the D point. The actual signal was right here on the trading day of May 1st. May 1st, then confirmed on May 4th out there. A nice move higher, but likely to run into resistance somewhere around 64.54. Right now, we got the Dow up 28. That should be no surprise to you. The S&P's up 3. No surprise there. The composite's up 15. No surprise as well. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the show, folks. Dow's up 51, S&P's up 5, Composites up 19, Russell struggling, it's up $1.30. DAX is up 65, FTSE's up 47. We haven't looked at light sweet crude, so let's go check in on light sweet crude. Black gold Texas TF $1.62 this morning. Interestingly enough, what oil is doing is nothing more than moving down to the bottom of its rising price channel out here. This should be an area that holds as support out here. Most is a rising price channel that's been in place since March 18th. However, what I will say is that you got a bearish reversal signal yesterday up towards the top of that price channel. So now you're getting confirmation. So the interesting thing is, will this price channel hold? That is a shooting star candle out here, which is the cousin of the hammer. And I'm just going to see what other patterns, maybe are out here. We've certainly got the A to B equals CD patterns have been all over the place inside of light sweet crude. Here's one of them. There's your, what did I do there? Totally, what a bonehead move that was. Let's try this here, see if I can actually do this for you. Come on, work with me. There we go. And so there it makes the 1-to-1. That was back here on April 16th, and then yesterday was the 1 to 1.618, A to B equals CD out here with a shooting star and then some follow through today. So here's the deal. If in fact light sweet crude breaks through this area, it says we're in store for more of a retracement. That more of a retracement, that would say to me that we would likely see move down to 56.22 or 52.29. Now, the cool thing there, well, I can't say that. I was going to say if it could form, if that were to be the case, and it could form an A to B equals CD to the downside and gets into 52.29, that would be a nice little Gartley buy pattern inside of light sweet crude. But right now we know it's up against support. We've seen 2 reversal signals here yesterday and then today's additional follow through. So we'll see if this level of support can hold out there. So I think we have the day pretty well figured out here. You've got the NQ up against its resistance area. It's trying to break above that. That's at the 43.98 area. If it can break above that, we're going to see higher price. So what you want to be watching, watch that VIX index. Watch where it's priced at. Remember to watch 1428. You can get to 1428 or below out there. That will not bode well for bears. It will only bode well for the bulls out there. Summation index, watching the composite. It's getting really close out here. Now, the Dow can actually get its price oscillator up above 0. There's about 6 issues that are in the red out here. But if the Dow can get everything up in the green, that could get up above 0 line. I would say she's not ready to continue moving to the downside. And right now, with regard to the price oscillator, that little descending there, I'll just move this arrow, the trend line out there. You can see that descending tops, beautiful tool out here. That price is traveling right up into that area as we speak right now. Hasn't crossed it. Come on, stay down there with me now that I moved it. Hasn't crossed it just yet, but it's kind of running right up. And if it does get through there, you don't need to scratch your head. You'll know what its message is because Stevie took you on a tour all the way back to the March 2009 timeframe to show you that patterns repeat over and over again. And if you're having trouble breaking through, it's because you're repeating an old pattern that you need to break, and I'll teach you how to do that at tonight's workshop, The Psychology of Trading. Again, very easy to get in. Just come on over to the homepage of TFNN.com, sign up for that, and I'll see you at 6:30 this evening. And again, next Thursday at 6:30 as well. 45-minute sessions, all archived and on your members page. Stay tuned, folks. Our man Basil Chapman, he's going to be up next, and we got Larry Pesavento, Daryl Martin, David White, Tom O'Brien, I think the Andy Heck Show as well. And have a great trading day. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.